Did you know the S&P 500 is just like the Yellow Pages? If you don't know what I'm talking about, you were probably born after the year 2000, but that's okay. The Yellow Pages were an index of businesses that were listed in phone books, and they were typically alphabetized and categorized by industry. Well, the S&P 500 is the same thing. It's a list, it's an index, and it is the top 500 businesses in the US. It includes businesses like Apple, Google, Microsoft, Meta, Nvidia, Tesla, Costco. Now, the companies in there are not necessarily the biggest companies, but they are the 500 that are leading the US in terms of value or importance to our economy. Let's break this down. So S&P, that stands for Standard & Poor's. All that is it's a financial and analytic company. They're the ones that came up with tracking all the data and all the numbers in these top 500 US companies. In this video, I'm going to go over why you would want to invest in the S&P 500, some advantages and disadvantages of doing it, how to do it, and how much it might cost. So let's start with the why. Why would you want to invest, or another word for invest, you can think of just buy ownership of. Why would you want to buy ownership in the top 500 companies in the US? Well, typically these companies are well established, they're widely followed, and they are considered pretty stable investments. This means that they are typically less risky because their price doesn't go up or down a lot. It stays pretty steady. Another benefit of the S&P 500 is that it contains companies in a lot of different industries. That's just my dog walking around. You're not just investing in tech or finance or AI or health and wellness. You're getting real diversification in your ownership because they come from all different walks of life. Okay, so what's the downside? The downside is that the S&P 500 only contains what are called large cap US stocks, and CAP stands for capitalization. So that means the value of the market share, how much value they have in the market. The industry categorizes a large cap stock as a company that generates over 10 billion in market capitalization, which remember is just a fancy word for value. You might be thinking, okay, well, what's wrong with that? There's nothing inherently wrong with that. It's just that it means that they have less potential to grow quickly or by a lot as compared to companies that are brand new, just starting out, or they're really hitting a growth spurt. So now that we know what the S&P 500 is and why we might want to invest in it, how do we do that? Well, you can't just go to your bank and say to them, here's some money, I want to put it in the S&P 500. I mean, I guess you could, but they might tell their family about you over dinner that night. The easiest way to invest in the S&P 500 is through what's called an index fund or an exchange traded fund, an ETF. Now remember, an index is just a list, and a fund is just a place to keep money. And that list, in our case today, just happens to be the S&P 500, the top 500 US companies. Now, you can also invest in this using an ETF, an exchange traded fund. So what is an exchange? An exchange is just a marketplace. You can think of it like Facebook Marketplace or Craigslist. It's an online marketplace where buyers like you and me can go and trade, buy or sell stocks, bonds, mutual funds. And the most common exchange that we use here in the US is the New York Stock Exchange. So that is our marketplace that we are buying and selling into. And since we can't just all run to the New York Stock Exchange, we have companies called brokerages that will take our money and allow us to invest from the comfort of our own home. These are companies like Fidelity, Vanguard, Charles Schwab, Edward Jones, Robinhood. There's a bunch of them out there. So the way we invest in the S&P 500 is through an index fund or an ETF, and we have to open an account with one of these brokerages in order to access those funds. So step number one is to go to one of those brokerages websites and open an account. Once you have an account open, then you can start trading, and that just means you start buying and selling within the marketplace. Another way you can invest in the S&P 500 is through your retirement account. So you can open this again through a brokerage, or sometimes your employer, if you're employed, will offer this as a benefit. You can also do it if you're self-employed, but typically then you're again going back through these brokerage companies. But how do you know which one to buy? How do you know which one is the S&P 500? Well, there's a lot of different options out there. Some of the more popular ones are VOO, which is a Vanguard index fund, or SPY, which is owned by a company called State Street Global Advisors. They also have another one called SPLG. But again, there's many more out there. These are just some of the more common ones that people use to invest into the S&P 500. Now, how much can you expect to pay for one of these index funds for one share? Well, it really depends. Some of them are cheaper than others. So for example, SPLG, as of the date of this recording, is trading, meaning its market price is around $80. And you can compare that to something like VOO, which again, as of the date of this video, was trading at around $625 per share. Now, I'm not going to get into all the specifics of why that is. Basically, it's because they were started at different times. The funds were created at different times. And so therefore they have different histories, either longer or shorter, in terms of pricing. It's a very simplified explanation, but I'm just trying to keep things simple. Some brokerage accounts will allow you to buy what's called fractional shares, which means that you don't have to buy the full share price. So you wouldn't have to pay $625 for one share of VOO. You could buy half a share for half of that price or a quarter. Some do, some don't. The other thing you want to look at is what's called the expense ratio. And this is the annual fee that you will be charged as a percentage of your investment. So a lot of times for ETFs specifically, they are fairly low. So it could be 0.02% to 0.06%. So if we look at VOO as an example, we see that that's at 0.03%. So once you select the index fund or ETF of the S&P 500 that you like, then you can go ahead and purchase it. So you can initiate a trade, initiate a buy through your brokerage account, and then you'll own it. I did do a video on exactly how to buy these in your brokerage account with screenshots, so you can find that on my page. But I hope this is helpful. Let me know in the comments what questions you have. If you're interested in opening up a brokerage account with Fidelity in particular, you can go to my link in bio and check that out. And then I also have other resources there to help you get started on your investing journey, including my free weekly newsletter where I go more in depth into all of these topics.